Good afternoon. It's a little after 2 o'clock in the afternoon on Friday, the 16th of February here in New York. I'm Jeff Christian of CPM Group. I want to talk a little bit about Silver Facts and Fantasies. Not a lot, because we're going to be talking about it very soon in greater detail. And I want to invite everybody who watches these videos to plug into that online webinar. Since 2021, CPM Group has been running Silver Fact and Fantasy online webinars. They typically lasted about 2 hours. We open up for questions. People can send questions in, or they can ask questions during the webinar. It's better to send them in ahead of time. We already have about 250 people, I guess, or more signed up, and we have just now sent out our invitations to participate. It's a free online webinar. We have probably more than 100 questions that people have sent in, and we'll try to address them all. Some of the questions are duplicative. Silver is a unique metal. It's a financial asset, and it's an industrial commodity. There's a tremendous amount of secrecy, not only about investors and how much they hold and where they hold it and how they hold it, but also in terms of refining and fabrication demand. So that allows a lot of misinformation and myths to be circulated. In the absence of concrete data, you can do whatever you can say whatever you want. Many investors have difficulty getting accurate information about silver. It's a millennia-old problem that's kept a lot of investors vulnerable to unnecessary lawsuits, and also kept some investors away from silver. In the late 1980s, when the silver price was falling, the Silver Institute asked CPM Group, why is the silver price falling? And our answer was because investors are buying less silver and fewer companies are selling less silver. There had been a lot of trading companies, commodities trading companies, brokers and dealers and banks and Sears, which had been selling, Sears and Roebuck had been selling silver in the early 1980s. And by 1984, 1986, most of those banks, dealers, retailers, and commodity traders had gotten out of the physical silver business as investors had backed away from the market. Based on that view and the basis behind it, the Silver Institute asked CPM Group for permission to strip down our silver survey at the time and create the World Silver Survey, which we ran for the first 5 years before ending our relationship with the Silver Institute in terms of the World Silver Survey. We started the Fact and Fantasies in 2021 because the Prospectors and Developers Association of Canada had canceled its conference that year, and every year we had a Sunday evening silver reception during the PDAC. In 2021, we couldn't do that, so there were a lot of people hawking silver. The Wall Street silver scam was going on. The bankrupt J.P. Morgan scam was going on. There were all kinds of nonsense going on. So we did this webinar. In 2022, when the PDAC restarted its physical conferences, our sponsors for that reception said, we want you to do that reception again, but we also want you to continue the online webinar. So since 2022, we've done both. This year, 2024, marks the 20th year of CPM Group's silver reception at the PDAC, and the 4th year for our Facts and Fantasies. You can sign up to listen in. As I said, they tend to be about 2 hours long, pretty intense and in detail. And you can also send in questions. We will produce a small booklet, really a preview of our Silver Yearbook called Silver Truths, and that will be sent to anybody who registers to participate in the online webinar. It's a good time to cut through the noise. Just as in 2021, there's been some recent fantasies that have focused on a range of topics about silver. There are also a range of fantasies about the economy and the financial markets and such. But in terms of silver, there's a lot of inaccurate information about the potential future use of silver in photovoltaic panels that to create electricity from solar power. There have been persistent misinformation about enormous volumes of silver being used in missiles, which is just not accurate. And there continue to be the usual ones. We're running out of mineable reserves. There aren't any inventories elsewhere. I'll run through a couple more with some charts in a second. And then there's the myriad of warnings about a collapse of this or that portion of the U.S. economy or the world economy. Banks are collapsing. The dollar is collapsing. Retail sales are collapsing. The sky is falling. On top of all of this, there are now investigations that we know of into coin and bullion dealers on at least 5 continents. Governments, regulatory authorities saying, gee, what these guys are doing, not all of them, but specific companies, don't seem to be copacetic with the law. So it's a good time to cut through the noise about silver and about the world. Now, there are facts, and then there are facts on steroids. You've probably heard that institutional investors, are now net short silver. Well, they're not. You can see from the chart here on the left that they have reduced their gross and net long positions. But as of last week, or 2 weeks ago, the end of January, investors were still net long silver. On the right-hand side, you can see coins, and we have data for January. 4.9 million ounces of silver eagles sold, up from 3.9 in January of last year, almost as much as the 5 million ounces in 2022. So investors have backed away from buying as much silver as they have in recent years, but they're still buying, they're still long COMEX futures, and they're still buying coins. ETFs have seen withdrawals over the last 2 years. This chart, for some reason, didn't pick up. There's a small increase in January of ETF holdings, but we have seen a substantial liquidation of ETF holdings in silver in 2022 and again in 2023. As with gold, what we're seeing here is not so much, well, part of it is investors' disenchantment with silver and selling their silver, but another factor is investors saying, I don't want to own silver ETF. I want to own physical silver and gold in a depository someplace or in my own possession. I don't want to own a share of an offshore company that's managed by a financial institution and it is administered by a financial institution and has other financial institutions involved. I'm more concerned about financial market stability than I am about my exposure to silver. So what we're seeing with the ETFs contrasts with what we're seeing in other markets in that it's not silver so much as it is exposure to financial counterparty risk that has been driving this reduction in silver holdings. You put it all together and you can see that investment demand got over 100 million ounces in 2021. It came off 2022, you can't quite see it, came off even more, got to very low levels in 2023, and we're projecting even lower levels in 2024 unless something dramatic changes. We are looking for a pickup in investment demand probably in the fourth quarter, maybe in the third and fourth quarters combined later this year, but for the first part of this year, we think that investors will remain relatively disinterested in silver. You can see the slope of that decline from the peak in 2011 to 2023 and our projection for 2024. And you can compare it to the peak that we saw from 1980 through 1989, when we slipped into a 15-year period, 16-year period of investors being net sellers of bullion. We were worried that that was happening in the period 2017, 18, and 19. But you can see from this chart, while we did see a sharp decline in the net purchases of physical silver by investors in those 3 years. It turned around sharply in 2020, 2021. So we're not quite sure. Are we seeing a repeat of the trends that led into that 15 years of investor net selling of physical metal, as we saw in 1990 to the late 1980s? Or is this a repeat of 2019, but at a much higher price? And let's talk about that price. Because one of the things that CPM Group does is we help investors and mining companies and governments and others understand what are long-term, realistic, sustainable prices. You can see from here, silver prices are down from where they were in 2011, 2012, into early 2013. That was the aftermath of the global recession, the Great Recession, the global financial crisis, and international sovereign debt issues, which culminated with the downgrading of U.S. Treasury credit rating in August of 2011. Silver prices then came down. If you take out those 2 years of particularly high silver prices, and you look at where we've been over the last 3 or 4 years, silver prices are very high. They're very high relative to fabrication requirements and cost structures. They're very high compared to refined production, to costs of mining and refining newly mined silver. Remember, 80% of the silver that's mined comes as a byproduct of gold, copper, lead, or zinc mines. And depending on how the individual mining company wants to account for its byproduct credits, you can argue, as many of these companies do, that the cost of them producing that silver is 50 cents to $1.25. Right? So compared to those kinds of costs for 80% of newly mined silver, $22, $24, $26 silver is extremely high. But we can go into all of that later in February. Please join us. As I said in the beginning, you can sign up for the Silver Facts and Fantasies. It probably will run another 2 hours this year, but it's well worth it in terms of giving investors a realistic understanding of what's actually happening in the silver market across every sector of the market. Thank you. That's all I have for now. We'll be back next week, I hope. In the meantime, take care of yourself, those around you, and try to do something good for the world. You can always visit CPM Group's website, cpmgroup.com, or send us an email at info@cpmgroup.com if you want to discuss ways that CPM Group can help you capitalize on and maximize your financial benefits of having exposure to gold, silver, platinum group metals, and commodities in general.